Welcome to Trade Pro. After about 8 years of trading experience, I want to talk about what I believe is the best way to trade. Now, this is going to be a style of trading, a sort of strategy with multiple rules that need to be followed. Now, this way of trading, in my opinion, is the best and most consistent way for most manual traders to go about doing their trading. Personally, I have found this to be the easiest way to trade, the most consistent, and easiest way to stay profitable in the long run. So let's talk about it. What is this strategy? What does it entail? There are multiple parts, so bear with me. I'm going to get through it one by one. First of all, we need to decide what our goal is when trading. That way we can devise a plan that puts us in that position as best possible. So when we are looking at this chart, when do we want to be entering into a short position? Well, all of these peaks would be the absolute ideal time to enter into a short position. And in an uptrend, of course, you want to enter into a long position at the bottom of all of the dips, expecting a continuation move with the current trend. Now, we have a goal. It's to enter in at the tops of pullbacks in a downtrend and buy at the dips and the low of the dip in an uptrend. So how can we accomplish this? How can we formulate a strategy that puts us in that position as best as possible? Well, first of all, we're going to need to know what the trend direction is, and this one is a very simple part of this strategy. All you need is a 200-period exponential moving average, which is a time-tested method of filtering the trend. So what that means is when price is below the 200-period exponential moving average, you only look to short pullbacks. And when price is over the 200-period exponential moving average, only look to long the dips. Now, let's talk about how do we know when to enter into that short on a pullback, or when do we know when to buy on that dip? How do we know that the dip is done? How do we know if the pullback is done and the trend is ready to continue? So let's talk about a few more rules that we can add in to help put us in the right position. Now, this next part has multiple layers to it. So let's start out with one of the rules that will keep you from entering when price is too extended to the downside or the upside, depending on the trend direction. Because we don't want to be entering into a short position right at the bottom here before a pullback. We want to be entering in at a discounted price. So how do we ensure that we're entering in at a discount so that we don't get caught on these bottoms right before pullbacks and get stopped out right before the trend continues in our favor? Well, I suggest using some exponential moving averages, such as the 20-period exponential moving average in blue and the 50-period exponential moving average in yellow. The rule here being you're not allowed to enter in until price has pulled back to at least the 20-period exponential moving average. This ensures that you're not entering when price is extended off of the EMAs, because when it is extended, it's likely already gone too far for you to enter, and you're going to have to wait for the next pullback. So having a rule that tells you that keeps you from entering when price is too extended to the downside in a downtrend or too extended to the upside in an uptrend. You want to be getting in at a discount. Remember, we don't want to be entering at a premium, entering into the trend at a discount, selling at a premium, okay? Rule here being making sure price is pulled back to at least the 20-period exponential moving average before you start thinking about getting ready to enter into the trend. Now, the pullback to the exponential moving averages is only the first layer to this part of the strategy, making sure you're not entering in when price is too extended, making sure you're getting into the trend at a discounted price. But you don't want to enter blindly just because price pulls back into the exponential moving average. We have to add some more layers to this. So what I suggest is something like a stochastic RSI, where we can also make sure that our indicator has fully reset so that price is more likely ready to continue. And fully reset means that it has come all the way back into the overbought territory. When price is in a downtrend and an indicator is overbought, that is often a good time to be getting in. So not only has price pulled back to our exponential moving averages, giving us a discount, but price has also caused the indicator to fully reset into its overbought territory. Another thing that we can talk about here is looking for things like hidden divergence. Hidden divergence is where price is making a lower high, but at the same time, an indicator makes a higher high. An instance of hidden divergence can be seen right here. We can see on this pullback, the stochastic RSI comes up to here, but then on this pullback, stochastic RSI has actually come up higher and already fully reset into the overbought territory, but price is making a lower high. So we can talk about hidden divergence and waiting for our indicator to fully reset into the overbought territory if it's a downtrend, or the oversold territory if price is in an uptrend, of course. So this is just another layer that we can add in as confirmation that price has potentially pulled back enough that it's ready to continue, so that we're not entering into the trend too early and potentially getting stopped out. Of course, you will get stopped out on some of your trades. It's just natural as part of any trading strategy. But what we want to do is do the best we can to enter in at a discount. And this is only the next layer, but we have another layer to get into here with making sure the trend is ready to continue and the price is pulled back enough. So let's get into that. So now that we've determined trend direction, making sure we're not entering when price is already extended, and making sure that our indicator has fully reset into the overbought territory or has hidden divergence, let's get into a multi-time frame approach. So this is another layer to making sure that the pullback is likely coming to an end soon. So what we're going to do is go down to a much lower time frame and use regular divergence to our advantage in the manner I'm about to show you. So dropping down to the 4-hour time frame here, we can then zoom out and look at all of these pullbacks on a lower time scale. I'm going to get rid of this, and I'm actually going to use the RSI instead. That way we can use this to find regular bearish divergence, which will help us determine when pullbacks are likely going to come to an end. So let's take a look at one of the recent pullbacks that I had circled on the daily time frame, which was up here. And what we can do is go to our RSI and look for regular bearish divergence on our RSI of the lower time frame, such as right here where we see price makes a higher high right here, but at the same time we have our RSI making a lower high. So this regular bearish divergence of a lower time frame can also make sure that we're not entering into a pullback too soon. This way we get in at a great price, and this allows us to catch the top of the pullback almost perfectly. Now, if we take a look at some of the other pullbacks along the way, yeah, we may have a little bit harder to spot regular bearish divergence here, but nonetheless we do get it on the 4-hour time frame. You may need to experiment with different time frames when doing this, so maybe go down to the 2-hour or the 6-hour or one of the other time frames to determine the best possible entry price. But it looks like on quite a few of these we get this higher high on price and a lower low, or a lower high I should say, on the RSI, which often gives us the perfect entry into this daily downtrend. And of course, as I just said, we can go down to a lower time frame as well and find these regular bearish divergences to help us join in to this downtrend at a good price. Now let's circle back and think about what our original goal was. The original goal was to make sure that we are shorting on a downtrend at the best possible prices whenever price is at a discount. So all of these pullbacks, we're trying to short at the peaks and enter into the downtrend. And I think that our rules that we have now put together do a great job of getting a great entry price on pullbacks. And of course, you're not always going to have winning trades, but what this does is puts the odds in your favor with a good risk to reward ratio so that over a series of many trades, you can come out profitable. Now let's cover take profit target and stop loss placement. And this ties back into our original goal of entering into trends at discounts and expecting continuation moves of that trend. So our take profit target needs to be placed accordingly based on our goal. So right now, let's say that you've entered into a short position on this pullback. I believe that the profit target should be at least at a minimum to the low before that pullback began, because as a trend following trader, you expect a full trend continuation move. You're expecting a lower high here and then a lower low. So your take profit target should be placed accordingly. As far as the stop loss placement goes, I do recommend using at least a 1 to 2 risk to reward ratio. And in my opinion, it is fine to place the stop loss purely based on where your take profit target is. So if this was the setup, this would be completely fine to me. Targeting at least the low before this pullback began and using a 1 to 2 risk to reward ratio or better, that meets my criteria for a decent setup as long as all the other rules of the strategy are being met. Okay. Now, I know all of the examples so far have been with a downtrend entering into short positions, but just in case you were wondering, the rules apply the exact same way in an uptrend, just the opposite. So instead of looking for bearish hidden divergences and bearish regular divergences, you'll be looking for bullish hidden divergence and bullish regular divergence. And the same thing applies on your stochastic RSI getting fully reset and so on. So exact same rules, just happen to be the opposite in an uptrend, in case anyone was wondering. All right. Now that's going to cover it for this strategy. The way that I believe most people will be able to find consistency in their trading is trading with the trend, with a trend following pullback based strategy, and something that gives you a set of rules to follow that make sure you don't make stupid decisions when trading. This puts the odds in your favor over a series of many trades with a good risk to reward ratio so you can be profitable. So thank you guys so much for watching. I do want to give a shout out to my affiliate, Capitalize.ai, and Bybit, BitGet, and my Patreon down in the description below. All those links, check them out if interested, or if you just want to support the channel. Thank you very much.